The DXY is close to a decision point, as are the euro and the pound. So in today's video, I'm going to show you what I'm watching in the week ahead for those markets. We've also got gold and silver. I'm talking about the S&P 500, WTI, and also Bitcoin. So my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So let's get into it here with the DXY daily time frame. And guys, not much has changed in the month of August. I mean, August has been a very slow month. That's to be expected. It is a summer month here in the US, so things do tend to slow down a little bit. And you can see here that is certainly the case. So following the last FOMC back here, right, this was the FOMC that really triggered the US dollar lower. You can see where since that time, the US dollar has just been sideways. Now, one thing that I have been watching, or really two things here over the past few weeks, is this trend line down here off of the January low. So this is basically a 2026 trend line, also the bottom of this channel. And if we go out here, you can see where this is also this area up here, right around 100.1 is the top of this descending channel from 2025. So what is interesting about this is that you can see where we had the breakout over here. So far, the DXY is holding below it following that FOMC capitulation that we saw. So what this is going to come down to for the DXY, and this is really just very simple, is you can see here, we've seen over the past couple of weeks, we've seen support here, support once again, support again. And of course, this is just a range, right? Range bottom down here, range top up here. But what you'll notice is that last week, we also found resistance right here at 100.12, which again is that level that the DXY broke out of and then closed back below. So right now, guys, if I had to lean one way or the other, it does start to look a little bit more bearish for the US dollar. The fact that we did have this right here, we failed to hold above this area. And also we have failed to close back above here and start to look constructive again. So the fact that the US dollar is just going sideways here after this move, and really just kind of struggling here to show any kind of bid, it does kind of look like we could get the rollover from the DXY, but time will tell. You know, it's just going to come down to where we close next week. I mean, look, if we close just barely below this trend line here today, that's not going to be enough. I need to see something convincing below these lows to really confirm that we have broken down. And even then, like I said in the last video too, the thing you have to be careful of is getting too bearish on the US dollar, considering the fact that the structure here is still intact, right? We have a higher high, we have this BOS back here, we have the market breaking out from this. This is the protected low down here, and we also have this inefficiency back here, right around 98.5. So this could be a case where the US dollar just comes back here toward 98.5, and then we get the bounce from here, okay? So that is one thing to be aware of if we do see this market break down. So all in all, guys, it starts to look a little bit more bearish, like I said, but right now we also have no confirmation of this. So basically for next week, same thing. If we start to see a sustained break below here, let's call it 99.4, that starts to look a little bit more bearish toward 98.5. If we get back above here on the daily time frame, back above these highs, then that starts to look more bullish for the DXY. All right, so let's move along here to the EURUSD. And if you guys want to use the broker that I trust the most, then check out the link right here on the screen, right below this video. That is going to be a link for IC Markets. And with that link, you are going to get a 100% deposit bonus up to $1,000, plus future deposit bonuses of 50% up to $25,000. Plus, if you deposit $10,000 or more into your account, using that link, I will grant you lifetime access to our Discord group and also the full SMC course. So if you don't see the link here, check out the description of this video. All right, so the euro, what we've seen here from this market is also, you know, obviously very similar to the DXY. We have it going sideways here. What you can see last week too is that this level, these two levels I talked about recently in videos, you can see where we did find support here at this confluence of support. Okay, so right around, let's call it 115.10 or so, between 115, 115.20, this general area back here, this was and still is key support for the euro. So this is the top of that channel that this market has been trading within all year, right? So we've seen lower highs and lower lows from the euro since the start of 2026. And here recently, you can see where we started to get a little bit of a breakout. Now, this breakout has lacked follow through. So far, we really don't have much follow through from this market. It is still just very, very sideways. Okay, so what this is going to come down to, in my opinion, is really getting that first close above these highs. Okay, so if we start to see the market give us convincing closes above these highs up here, then that starts to look like a continuation of this. Now, the one thing that you've got to be careful of is obviously we have this high back here, which is going to be resistance. This is also the protected high. So in other words, if you look at this downtrend back here for the euro, you can see where we have clearly lower highs and lower lows, right? And so this back here was your BOS, making this the protected high. If we get the close above here, then this starts to look like more of a significant bottom for the euro, okay? So that's how I'm approaching it right now. I mean, obviously, like I said, the last couple of weeks they've just been very sideways. I also said in recent videos that the only way I would short this market is if we got to close below here. If we got a daily close back down here in this area, then absolutely I would be looking for shorts. Okay. But we never got that. Instead, we just, tested this level last week and then bounced. Okay. So pretty choppy, very choppy and indecisive from this market. And the same thing here for the pound. Now, this is the trend line that I talked about last week. And what you'll notice here is that we had the close above and new support on a daily closing basis. So if I move in here, what you'll notice is that off of this level last week, we actually got the close above. Okay, so this was resistance here. And you can see we got the close above right here. Notice what became support the very next day. So support here, support once again, support on Thursday. So far Friday, we're seeing some follow through. So what this is going to come down to, same thing for the euro, is really this high back here. If we start to get, acceptance above here, then this starts to look like a more significant bottom for the pound, to where we could be coming back here to test some of these highs back here in this area, like this high back here around 136.50, possibly if we get the sustained break above these highs. Okay. So right now, inconclusive, especially with, again, the DXY just going sideways. But like I also said, it is starting to look a little bit heavy here at support here for the DXY, which could, push the pound higher following that breakout. So keep in mind too, guys, this is the first weekly close above this trend line. All right. Same thing for the euro, right? I think it's the second weekly close above the top of that channel. So it is still constructive here for this market with this breakout, right? So I don't want you guys to think that I'm bearish in these markets, because I'm certainly not with this price action here. This could be a case where, like I said, once again, get the acceptance above the highs. We come back here and test these highs back here. And keep in mind too, there's inefficiencies back here for the pound as well. So I'm not in a rush, guys, to make a big call on these markets until I figure out or see where the DXY is headed next week. Okay, now the gold, let's talk about XAUUSD and then we'll move on to silver. This is what I warned about last week, is you can see where we have this yearly open through here. We also have the top of this channel. So lows down here, highs up here, and guess where we found resistance last week. So in the last SMC Outlook, I told you guys to be careful of this area up here if you were longing, simply because this was going to be resistance, and certainly that has been the case. Basically all of last week, just sideways, right? So if next week we see a daily close above here, right, get above this level here, this flips to new support, and we could see gold take off and run back towards some of the highs. Now, if on the other hand, we see the market close back below areas like this, then that could be at least a short-term pullback toward this inefficiency, okay? So really simple. Basically, it comes down to 43.33, and then this level up here. So let's call it next week, that's going to come in right around like 33.90. Let's call it 4,400 to be conservative, okay? So basically between 4,400 all the way down here to 43.33, this is going to be your range for next week. Get above here, starts to look bullish. Get below here, starts to look bearish. Now, the one thing on the bearish side is if we get below here, guys, keep in mind, this could just be a short-term pullback toward this area before the market rallies, okay? So just because we were to close below this level here, it does not mean that this is all of a sudden, massively bearish once again, because it could just be a short-term pullback before we move higher, okay? But I think that, in the near term, that's kind of what I'm looking at here for gold. Okay, so next up we have silver here, XAGUSD, and this one is a little bit more progressive here than gold, and you can see where we have closed above the protected high back here at 63.27. So this was the protected high because we had the BOS back here, right? So what I mentioned in the last video was that we did close above here. So far though, we really haven't had much of a pullback. We pulled back about toward this level. However, we really never got a push down here into inefficiencies like this or sweeping this low. Ideally, I would have loved to have seen that, and we could still do it, right? We could still do it. We could still next week, push down here into this area, possibly even pushing down here toward this imbalance before we rally, following that change of character. So for me to buy a market, really, that is what I would want to see here from silver. If you look at our fibs here from the low, right? Because like I said last week, this is really where the displacement started. If we look from the low up here to the high, this is the area back here, basically anything below the 50%. I would ideally like to see silver back here if I'm going to look to buy this market, which clearly we have not had yet, okay? So pretty uneventful, like the rest of the market out there last week. Just waited to see if we do get a push lower down here into this, $60 area to possibly look for a buy. All right, so US oil, guys. And if you want to see exactly how I trade SMC, by the way, check out the link right here on the screen right below this video. That's going to be a free SMC strategy. Click on that link, enter your name and email address. You will be given completely free access to 2 hours of training. It's the exact same strategy that I use every single week. So with WTI, US oil, we've talked about this one many times in recent videos. You guys know, or those of you who have watched these videos know about this call I made back here. So when the market was coming down here, I said, watch 66.70. That was a great buying opportunity. You can see we even had a change of character back here as well. So that right there, my target was 90, okay, hit perfectly. And what I mentioned in the last weekly video was that if we go to a 4-hour time frame, this pullback back here I mentioned looked pretty constructive, okay, in other words, bullish. And what you can see here is that this formed into a falling wedge, okay, and oil got squeezed. We saw a nice little pop here. However, since that time, we have pulled back. Now, what happens is though, is people will look at this on a 5-minute time frame and get bearish here. In my opinion, this is still looking pretty constructive going into next week, simply because you have this support level back here. And so it was resistance here. This looks like a deviation, a failed breakdown. We now have support down here once again, down here at 78.79. So if you also look at the recent price action, you could make the case that off of these two lows here, we have a possible flag forming on this pullback, okay? So looking here at this price action, again, this starts to look pretty constructive. If next week we were to see oil pull back down here into this confluence of support, I think that could be a really interesting area to start looking for a buy down here. Alternatively, if we get the break above here, that also starts to look pretty constructive for the pushback here towards some of these highs, possibly this inefficiency around 88, okay? So really, ultimately, I think this looks still constructive as long as we're holding above this 78 to 79 area, okay? So I think, right now, I wouldn't go out and buy oil because it's sitting at resistance and also, within this pullback. But like I said, down here would be interesting. Also, a sustained break above this level could be interesting as well. All right, so let's take a look here at the S&P 500. And guys, I've got one level on this chart because literally this is the only level that matters. Now, this white line here, this is a fractal or an analog from late 2021 going into 2022. And what I talked about last week was that you can see here, basically for the last 18 months, we have followed this pretty accurately. Even this, larger pullback back here was tracked perfectly with this analog. And you can even see with this price action here recently, this too was also tracked perfectly. So really interesting stuff. Now, I want to be clear, I'm not saying that this will happen. Fractals are really 50-50, right? It's just an observation that the market is moving in a similar fashion to what it's done before. There's no guarantee that it continues to play out that way because what it comes down to is the price action on the chart, right? Does it confirm this or not? So back here too, what you'll notice is that this was 2021. Notice the higher low, right, within the range. And then we had, again, this white line up here. Notice how we topped out up here, and then that became a failed breakout. And what you'll notice is that the current price action, so if we, remove this here, right, what you'll notice is that we have a very similar pattern. We have this low down here, we have a higher low, we have the range, we have an expansion out of this. And in fact, even this right here, 4 days up, this was the same as 2021. So what I'm asking myself now is, does the S&P 500 or SPX here in this case, stay above 77.64? Now, if you're looking at the SPY, that's going to be right around 773, okay? So keep that in mind. Now, with this here, okay, you've got this high back here. You've got all these highs during this consolidation. We've had the close above. Now, the question is, does this now serve as support, okay, where we get the retest next week, and then we just bounce from here and continue higher? Or does this level fail either today or sometime next week? If this fails and we get a close below, this starts to look like a failed breakout, and this starts to look more like distribution than accumulation. In other words, we come back here toward some of these inefficiencies, right? Possibly this gap down here. So that's what I'm watching right now for the S&P 500. It's unclear, obviously uptrend, guys. I'm not trying to argue that point, but I still find the 2021 analog very interesting, and it's by no means deviated enough from that, really at all, for me to say that that is no longer a possibility. Okay, so again, watch this level here off the highs. This is going to be key support going into next week. If it fails, then we're looking at that push lower. Obviously, if we hold above and show constructive price action up here, then that's just a continuation of this trend. But either way, interesting times for this market. I really do think that the next few days, let's say next week, could really determine, guys, whether this just continues higher or we get a more significant pullback from stocks over the coming weeks. All right, so last up, we have Bitcoin here, BTC, guys, and this one too has just been very uneventful here during the summer months. So right now, what I'm watching, I mentioned this on X the other day, a few days ago, but it looked, what I said on there was that it looked like more likely to dump than pump. right here in this area. And as you can see, that's certainly what we got here on Friday. So a couple things I'm watching. First of all, 62,275. This is going to be the equal lows back here. We probably come down here and sweep this over the coming days. Typically equal lows like this in a range bound market, this doesn't last long. Typically you get Bitcoin coming down here, wicking below it, and then either, popping up from there or, wicking below it, getting a little bit of a relief and then dropping down here toward the 61 area. So ultimately you can see too, where we're moving within this descending channel here, right? We're also now moving, or we're moving within this ascending channel back here as well. So just really, really choppy price action. I mean, for the most part, again, you've got support down here, 62,275, 61, and then resistance is going to be up here around 64. Obviously that big one being 65.4. Okay. These highs back here following this deviation. All right, so looking pretty bearish at the moment. We probably, like I said, come down here, sweep this level here, and then from there, we'll see if we can come up here and reclaim some more significant levels like these up here, or we just push lower following a bounce down here toward 61. That's it for today's video. Keep it locked in here. Subscribe to the channel. Also check out that free SMC strategy right here on the screen. Click on that link, enter your name and email address, and you will be given completely free access. So enjoy your weekend. I will talk to you again next week.